Commercial real estate has been a pretty tough place to be over really the last 3 years, with huge interest rate hikes causing major drops in property values and very few deals getting across the finish line. But today, we're finally starting to see some signs of life in the commercial real estate industry, with another recent rate cut behind us and investor interest starting to pick back up. So in this video, we'll walk through what the latest research is saying about a recovery in commercial real estate and what this might mean for you if you're looking to break in. So the first big sign that the market is recovering right now is the major uptick in fundraising activity we've seen so far this year. According to Cushman & Wakefield, the year-to-date fund closings through August of 2025 have already come in at $86 billion. And if fundraising continues at this pace, the industry is on track to see $129 billion of capital raised in 2025, which would represent a 38% increase from 2024 figures. This year's fundraising amounts are also being led by some of the biggest names in the real estate industry, with Brookfield and Carlyle raising $16 billion and $9 billion respectively, with each of these closings representing the largest real estate funds that each of these firms has ever raised. In the second quarter of this year, Blackstone's non-listed BREIT also raised $1.1 billion, which was BREIT's best fundraising quarter since 2022. And many of these funds are targeting distressed real estate assets, with almost $1.7 trillion of commercial real estate loans coming due in the next 2 years, and many of these borrowers struggling to find a way to pay off these existing loans when these ultimately mature. According to Deloitte's 2026 Commercial Real Estate Outlook report released late last month, 34% of borrowers surveyed said that they either plan to ask for an extension or modification to loans in their portfolio at the end of the loan term, and 15% of respondents said the most likely outcome at the time of these loan maturities could end up being foreclosure. And as the extend and pretend strategy continues to become less effective for borrowers and lenders become less willing to continue to kick the can down the road, this should bring a lot of investment opportunities to the market that funds like the ones we just talked about are very well positioned to capitalize on. Now, on top of the uptick in equity fundraising we're seeing from private investment managers today, we're also seeing a very big uptick in fundraising right now on the debt side of the capital stack. Private debt funds targeting North American commercial real estate have raised more than $20 billion so far in 2025, which puts this year on pace to rank as the second strongest ever for commercial real estate debt funds. And a big part of that $20 billion number is Blackstone's $8 billion Real Estate Debt Strategies 5 fund, which closed in March of this year and is now the largest debt fund ever raised according to Preqin. And from a loan origination perspective, new loan origination volume in the US and Canada was up more than 30% year over year in the first half of 2025, with average spreads on commercial real estate loans also coming down between about 40 and 50 basis points over the last 2 years. According to CBRE, average LTV ratios also increased to 63.3% in Q2 of this year, and more than 75% of commercial real estate loans of over $10 million had rates between 5 and 6%, which also helped reduce the overall cost of capital for investors to get deals across the finish line. And directly related to that decreased cost of capital, the next big sign I see that the commercial real estate market is finally recovering is the recent uptick in commercial property valuations we've seen across the country. According to the RCA Commercial Property Price Index, commercial real estate saw year-over-year price increases of 2.4% in August of this year, which was the biggest year-over-year jump we've seen since the end of 2022. This also represented a 90 basis point increase on a month-over-month basis, and while we can't reliably expect price jumps to continue at this pace throughout the rest of this year, this is a really sharp uptick that can indicate some major positive shifts in the market. Retail real estate saw the highest growth of any asset class in August, up 5.3% year over year, and industrial prices also jumped by 5% on a year over year basis and by 80 basis points since July. Even multifamily and office properties, which have seen the biggest price drop since 2022, saw positive year-over-year value growth, with apartment prices up 20 basis points since August of 2024, which was the biggest annual growth rate posted in the last 3 years for this asset class, and office prices rising by 70 basis points year over year and by 60 basis points over the previous month. And while interest rate drops have very likely had an impact on these price gains, cap rates also fell in the US in the first half of this year, according to CBRE, and we also saw the second highest transaction volume since Q4 of 2022 in the second quarter of this year. And even though pricing for most real estate product types isn't at the level we saw 3 years ago, these are all very positive indicators that the market is starting to turn around right now and investors are finally getting more comfortable with the new normal in commercial real estate. Now, what I see as the most encouraging thing about everything we've talked about so far is that for people looking to break into this industry right now, the uptick in dry powder and the likely transaction activity we'll see as a result of that and loan maturities over the next few years makes it very likely that hiring in this business will start to pick back up. When companies raise capital, they need people to help deploy that capital into the market, and this usually means an increase in jobs in some of the most sought after parts of this industry, including roles in acquisitions, investment sales, debt and equity placement, and asset management. And in just the first 9 months of this year alone, Cushman & Wakefield more than doubled its full-time 2024 recruiting numbers. And according to research from Ferguson Partners, which polled 170 public and private real estate firms about their hiring strategies for 2025, the number of companies planning to increase hiring this year was 3.5 times higher than the number of companies that were planning to cut their existing staff. 77% of private firms surveyed in the report also expected salaries to increase this year, which is a big shift in sentiment from 2023 and 2024. And if transaction activity does end up ticking up over the next few months, bonuses could also end up coming back to much more normalized levels. Ultimately, there are a lot of really positive signs right now for a broader market recovery in commercial real estate. And even though we don't know what might happen with interest rates or trade policy over the next few months, this is the most optimistic I've been about a turnaround in a very long time. And if you're watching this and you are trying to break into commercial real estate right now as hiring picks back up, and you want to make sure you have the skills you'll need to land interviews and pass an Excel modeling exam that might be given to you at top real estate investment, development, brokerage, and lending firms, make sure to check out our all-in-one membership training platform, Breaking into CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Break into CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on the channel on what's happening in the commercial real estate markets today, make sure to hit the like button to let me know. And let me know in the comments if you think that this is the sign of things turning around right now, or if you think something different is in store for 2026. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.